always hear this comment. It's not about timing the market, it's about time in the market. And we can see that time is obviously important when it comes to investing. We've all heard this quote before, but let's look at it practically. Sam, if I can turn to you first, we can see on screen here that there's $100 and it was invested at a certain particular point. But can you take us through practically what time in the market actually means?
Yeah, it's an incredibly powerful exercise, just looking at this notional $100. It was a time of heightened volatility, petroleum shortages, the market had crashed. But what is fascinating is when you take a step forward about 50 years to the end of 2022, the really interesting question is, well, how much, if you'd invested in the share market, would that $100 have grown? You know that there's been an 87 crash and we had one in 2000, the GFC in 2008. So there's been some volatility along the way. You know it's going to be higher. The question is how much? And I think it's fascinating to understand that it would be worth, in today's dollars, over 23,000, which is an incredible return, that time in the market concept you're talking about. Conversely, if I wanted to be safe, if I wanted to be cautious and I had that money invested in cash, how much would that look like? Well, you can see on the screen in front of you, it is significantly less at only $350. I think it's a really powerful little example, that one, Andrew.